Good Friday morning, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer. Be aware neither myself, Dimitri, or Market Chameleon are registered investment advisors or broker dealers. If you are searching for investment advice, please search out a registered broker dealer or investment advisor. This show is for informational purposes only about Market Chameleon and Market Chameleon tools. And with that, we'll get started. How are you doing this morning, Dimitri?
Good. How are you all?
Good.
So good morning, everyone. And uh, before we get started, I'm going to share my screen, and I want to make a quick note to anyone joining us for the first time. Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. And if you do have a question, type it into the live chat on YouTube. Will's watching it. He'll let me know and read it back to me. And to give you a couple minutes to put those questions in, we're going to start out with our pre-market report to see if we could get insights, what's trading in the pre-market hours, and then we're going to move on to our questions. So we are on the pre-market report. Up top, you have this calendar view. You can see the dates here and then summary statistics for each date. And this allows you to see from a high level what's been going on in the pre-market hours in the last week. And that's one way to compare today's date, which is all the way over here, to how that compares to what's been happening recently. And if you are able to just scan it with your eyes and perhaps see something unusual or a particular trend, you could really eyeball it this way. You can go back further using the calendar over here. So let's start out with what's going on today. We're on April 12th, and here we see we have 385 stocks that are trading higher in pre-market, 405 stocks trading lower. We have 170 million shares trading on up volume, 53 million on down volume. And if we convert that volume to dollar value, we have $835 million worth of stock trading higher, $3.6 billion worth of stock trading lower. So looking at it from this perspective, it seems like so far traders in the pre-market have a bearish sentiment. Let's look at it from a couple more perspectives, and then we'll move on to our questions. So now we're going to come down here, and as I slide down, we get this more granular view of the activity in the pre-market. We see stock symbols, price changes, volume, alerts for securities trading in pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. I'm coming down and I see that 84 stocks made it onto our biggest percentage gainers list, 84 on our decliners. So that's really dead even there. Now, to make it onto this list, we do set thresholds in place for volume, price, liquidity, because stocks in the pre-market can trade with very low liquidity, very low volume. And if it meets the thresholds, it can make it onto this list. That includes stocks that are low cap stocks, ETFs, leverage products. It could be an inverse ETF, going in the opposite direction of the underlying. And to narrow down this group of stocks to a smaller group, we could use the filters above. If you have a watch list and you like to filter by your watch list, because you just track a certain number of stocks that you're interested in, you can filter this list by those stocks, by your watch list. We're going to use this in ETF filter in our example. I'm going to drop it down, and now we have different ETFs to select from. We're going to choose the first one, SPY. And when we do that, you see that the stocks below got filtered by stocks that are holdings in the SPY ETF. So these are we basically filtered S&P 500 stocks, right? That's the group we're looking at. And here we see 8 stocks made it onto our biggest percentage gainers list, 17 on our biggest decliners list. So this also points to a more bearish, lean, bearish sentiment in the pre-market trading activity. We looked at it from, a couple different perspectives, and so far, the indications are, pointing, more towards the bearish side in the pre-market activity. So we gave it a couple minutes, Will. If you have questions, I'll take some now.
Nothing's popped up, D.
Okay. So let me go to what we were talking about yesterday. Let me see. There was a question. It was about a feature and a price action. So I'm going to come back here, price action, and look at the VWAP table here. And this will change a little bit. We started updating it. We had to publish it out a little bit earlier. And that was because we released our contingent trade activity. So I'm going to come over here. And this here is Tesla's VWAPs. Okay. And this is a table that's shown summary statistics, VWAP statistics, minute by minute for Tesla stock. Down here. And then when we find something interesting within the minute, we tag it, and these will be summary statistics. Okay. So let's just talk about this a little bit further. Let me get out of here. When we look at trading in the during the day, and we look at the trade tape itself gives us a lot more information when we're looking at the granular tick by tick, right? So usually you'll see like this total volume, 89.4 million shares traded in Tesla, and that's like the aggregate volume. But that doesn't tell you necessarily what's beneath the surface, what's going on with this volume. Is it, are there lots of large block trades? Or was there any particular moment during the day that, was responsible for most of that volume? And if there was, what could have caused it, right? It's important to understand how the stock trades and how it reacts to things, right? So you want to understand that. How do we get here? How did the stock, get to this? What was the trading activity that got us here? What was inside that volume? So to do that, we start breaking down that volume into categories and buckets and so forth, right? Because we have lots of stuff going on. We have dark pool trades, we got contingent trades, we have trades that could be volume that could be due to market events. We could have volume to due because of hedges, options trades. So how do we break it down and understand it, so we understand how do we get here, what was the cause of it, and how do we section off the interesting things from things that could explain and the unusual things. So that's the beginnings of this particular tool, all right, to start doing that. And we looked at yesterday, the first tool is it takes out the volume bursts, right? So here in Tesla yesterday, we didn't see any big volume bursts on the buy side. We did see 3 large volume bursts on the sell side. all right, for $379 million worth of stock. The volume weighted average price was 170.56. This was the average price impact on the stock, down 48 cents. These were the different times that it happened. So three different periods: 3:55, 10:16, 10 o'clock. This little plus is saying that something else happened at 10 a.m. that could have contributed to this downside volume burst. Right. So if we click on it, 10 a.m., it takes us to the 10 a.m. VWAP. And here it is. There's a sell burst here, Tesla, where the volume for this particular minute, right, was 4.3 standard deviations away from its typical volume. Okay. So that's a big volume burst, right? So where did it come from? This isn't what we typically see. So something may have happened where, a program trade or something happened where, there's a big amount of trading by or orders coming in, right? That we don't see. And it's not likely that there's, all of a sudden, four times greater amount of retail investors all simultaneously putting it in. Something something caused it. And usually these are done through program trading, right? Either program trade, algorithmic trading. It could be there like a VWAP trade, but something there, is unusual, and that's why we section it off to study it further. Okay, that's
interesting, because there was an article last night that Cathie Woods has been acquiring Tesla stock.
Okay,
for ARK investment. Yeah.
Okay, yeah. So but anyway, this would be separate from the Cathie Woods commentary. This is looking at strictly the volume and price action in Tesla and trying to understand it, right? Because the more you understand it, the more you're used to seeing how it behaves and why you feel more comfortable with your decisions, and perhaps even start to anticipate, I've seen this happen. What usually, what is usually how do things usually work out afterwards? Okay. So here we're looking at 10 a.m. and we see that, you could see here 948,000 shares of stock traded in that minute. And you could just see here, right? I mean, look at the minutes right before. We could kind of see that's a big, there was a big burst there, $161 million worth of stock. So just comparing it right here on this page, there's something happened, right? There's something worth taking a look at, right? Like what caused it, why, where do we think it's coming from? Is it significant, not significant? These are things that we want to start to research and study. And over here, we see that there are other things that we picked up going on in the market at that same minute, right? So something in that minute, and you could see how fast that the market reacted to it, right? So, and there, right off the bat, we see that there is an FOMC speaker, right? He was speaking 10 a.m. Sometimes they come out with a statement or release and then speak. So at 10 a.m. that happened, and then there are two other events simultaneously. The other ones were the following. There are 27 stocks in the S&P 500, right, that all had a sell burst simultaneously. Basically like a program trade, right? Like a basket, like where you're like, okay, we don't typically see large volume bursts in this many stocks. So that's one thing that we filtered out. And also there's a big down move in the uh, XLY ETF, which Tesla's a member, right? So that's the sector. So there's a sector, particularly the XLY sector, that had a big sell burst and a big basket of stocks in the S&P 500, and we see the FOMC speaker all happen at that time. So this could have been a program trade, that is reacting to that news and did a big sell burst. Okay, so that could be the explanation. And we could even see, well, what happened afterward? How do these usually work out? Do they follow through? Do they recover? So you got, a big, because one thing is clear then is that, okay, somebody did a sell burst, right? But what happens next? Is there a follow through? Because if they're wrong, they might need to buy back, right? We could go and then see, well, what happened at 10 a.m. Was there a recovery or a follow through? So that's part of trying to learn, the mechanics and things that are going on, and how do prices react? How do volumes react? Do things recover and so forth? So we see then at 10:16, it was followed by another sell burst, right? So between there, we had XLY, same ETF, and in this moment, so this one had a bid fade. Okay, so let's talk about what is a bid fade. The market can move down on, right, heavy selling, a lot of selling, where it basically, the selling starts to hit the bids and remove the liquidity, right, through volume, through trading transactions. But the market could also go down because people remove their bids, right? Let's say people change their mind and say, you know what, given the information that I'm seeing, and given the activity I'm reading, I'm going to lower my bid to compensate for that, right? Like maybe my model was expecting one thing, and then my model, because the models are all connected to information, and they're pegged to different prices that they're seeing. And let's say that my model is all of a sudden saying, wait a minute, maybe the Fed said we're not going to lower interest rates 4 times but 3 times, or I'm seeing that there's a less liquidity in the options, or whatever it is. Well, now I'm going to lower my bid, right? Maybe I remove my bid, or I lower my bid. So what will happen is that when usual liquidity gets removed, right, from one side, let's say there's more buildup on the sell side and removed on the bid side, well, the stock could drop even without a lot of volume, right? All of a sudden, it could just go to a different level with less than usual volume or normal volume. So that's what we call, in our system, a fade. The bid faded, right? The market dropped, but not on a lot of volume. So a volume burst is different, right? A volume burst is where there's unusual volume. A fade is where there's an unusual price move on lower volume. Okay, that's the difference. So what we saw was at 10:01, so at 10, remember here, I'm going to go back. Unfortunately, it's not on the same page, but here at 10 o'clock, we saw, the FOMC speak, a big sell burst, right? And also in that sector, right? The sector that Tesla's in. And then the minute after, it was followed by that the market just faded, right? It just started fading lower. Not Tesla. Keep in mind the sector out there. Okay, started fading lower. So the bids were, either getting removed or they're getting canceled and replaced at lower prices. Okay. So that happened in like the first 2 minutes. So you could see here, that created potentially more weakness in Tesla as well, because Tesla itself, the pricing, remember when you're doing electronic algorithmic pricing, the liquidity is going to be pegged to other things that are going on, right? Some of that liquidity is going to be pegged to what other things are going on relatively in the market. So it seems like, at 10:04, maybe, that the news started maybe getting digested and so forth. Maybe it's slowing down, but we did see 10:16. Again, big sell burst, 143 million. And here we see that there are two other things that happen that could have impacted, that Tesla, it's working in sympathy with, right? And one is that there was a big basket of S&P 500 stocks that all experience now this was not a volume burst, but a bid fade. So 43 stocks out there, all simultaneously, the prices dropped, not on big volume. Okay. So liquidity, so what was happening is just the liquidity providers were moving down their prices. Okay. And we also, and the same thing happened in the ETF sector. Okay. So what's going on? So far, what we're seeing is not, could be explained that it's not something specific to Tesla. It's probably just a reaction, a reaction to what's going on elsewhere in the market, probably in the S&P 500 and in the sector itself. That's what kind of, right now the inference is, because we're seeing these sell bursts, but they could be explained, right? They could be explained that, yeah, these are just, it's adjustments along with the market, right? And why is the market adjusting? Maybe because that FOMC speaker, right? Whatever, kind of all happened. Like, what was the trigger? It was an FOMC speaker, right? He was scheduled. And by the way, if you go to the calendar, right, you could go to our calendar and see ahead of time who's scheduled to speak and so forth. So even, before 10 a.m., this wasn't a surprise. Like, you could even anticipate maybe something might happen around 10 a.m. because there was a FOMC speaker scheduled to speak, right? So this is, so one is, you can, in the beginning of the day, you could look up forward events that might be happening today and start preparing yourself and even see what happened previously. So let's come back here. And so far, these two sell bursts, it could be, it's nothing that, would be, we could say contributed to a firm specific or Tesla specific. Okay. Because it does look like, here's the explanations. You saw another one at 355. And so those two, happened right close to each other, 10-16. All right. Seems like the stock recovered nicely, right? Now we're up at 175. And then, another sell burst right around the end of the day, 355 right here. And, this, nothing happened that minute, but around the last 10 minutes of trading, especially the last minute, one thing that we could infer is the following, that a lot of algorithmic trading, hedges, and un filled VWAP orders are going to be done towards the end of the day, right? So what do you have? You have lots of trading going on in options. You have lots of trading going on in pairs trades. You have lots of trading going on with dealers, mutual funds, all this. And whenever you have leftover inventory that you need to balance, it's going to happen close to the end of the day, right? Because you don't want to carry that extra inventory or extra risk towards the next day. So maybe an options market maker is trading options all day, but happens to be sitting on a long position or a short position. Well, how do you balance it out if you have a delta risk? Well, at some point you got to hedge it, unless you're just going to let it ride, which most risk management teams will tell you to, that you got to hedge some of that risk. So that's what we'll see, is some of that activity towards the end of the day. So you always see a pop, and that's what we're compensating, that towards the end of the day it always pops. So those last 10 minutes, last minute, that's what we're trying to look for. How are people balancing their positions, to try to go out potentially flat? So we could see here, look, 116, 62, 50, 75 million. It's not typical of what's going on. 30 million, 25, 25. So what's going on here last five? It's not like all of a sudden every single day, because this is, pretty consistent every day. It's not like every single day, the last 5 minutes, you have, lots of retail E-Trade customers deciding that's the moment we're going to trade every single day, right? That's not what's happening every day. This is typical because of, rebalancing, right? So that's what we're looking at. Is this sell burst? It could be just a rebalancing. It might not be, specific to something that happened in particular. It could be just a rebalancing. So far in Tesla, just looking at this, it had 3 sell bursts. We could see it's below its typical average, right? 431 million, 379 million. And we could kind of explain it away, right? So that's the important part. Is like, can we explain it away? Does it make sense? Yeah, it's nothing unusual. This is probably, these happened, but we could see why it happened. So that's the point of getting used to what you could explain, what you can't explain, what is unusual, what could be the beginning of something. So real quick, I'm up at 9:30, Will, so I'm going to stop there. But we're going to be doing more with this, and it's going to look a little bit differently. But for now, you guys could get like a little bit of a taste of what's going on.
Awesome job, D. Doug did mention earlier, this VWAP tool has enhanced my intraday trading edge to a new level, and thanks you. So awesome job.
Thank you so much.
Thanks for doing this, Dimitri, as always. Thank you, Chameleons, for joining us. We will see. Have a great trading day. We'll see you on Monday. Thanks, D.
Yep. Thanks, everyone. Stay safe out there. Have a good weekend. Hope you guys have a great trading day.